Folks, there are many sellers on the market now hoping for a bailout. I'll get into that, and then the latest home prices and insights for the Peel and Durham region for week ending January the 8th, 2025. You know, when I talk about a bailout, I don't mean in the traditional sense that we understand a bailout where the government gives a ton of money to a company to bail them out of whatever financial trouble they got themselves into. What I'm getting at is we see it from when we're working with our buyer clients. And we've been seeing it for months now, where one of my clients, we're looking at properties and they'll like the home and they're considering, you know, maybe this is a home that we should be looking at buying, which triggers myself doing a bunch of research on that property and figuring out kind of what would make sense under the current market conditions right now, what would make sense that this home actually sells for. And then we discuss those numbers with our buyer clients and decide what makes sense as an offer to put on that property. Well, last year, this year now, already we're seeing it actually maybe even a little bit more now, where we've put offers on properties and the price that really makes sense based on the current market conditions, the seller's just not having it. And when we get deeper down the conversation with the listing agent, I've come across situations many times now where the listing agent says they can't afford to sell it at that price. They won't cover their mortgage. And when you start really understanding what's happening, well, there's a lot of sellers that bought around the peak. Now, a few months before, a few months later, all prices were elevated. We're not just talking about that 1 month that we call the peak. If you're looking at that, there's a few hundred sales. If you're looking at the GTA, there's a few thousand sales. But if we just focus, say, on the Peel and Durham region, well, if you look at the several months or half a year leading up to the peak and half a year after the peak, it's not like prices started here and, like those prices were all elevated. Well, we are down 25% or so from peak pricing a few months before and a few months after. So anybody that bought then and is selling now, they're selling 25%, maybe 30%, some of them, depending on, specific situations. Their price point versus what they bought it for, it's way down. It's down 25, 30% from when they bought. And if you kind of think of the math of the whole mortgage and qualifying and all the financing side of things, you could kind of see the struggle that they're in. So these sellers bought at peak pricing. If the property was less than $1 million, they were able to buy with less than 20% down. So let's say they put 10% down into this home. They got into their first home. They're excited. Well, the market has dropped 25% since then. Any of these people selling now already have a negative. If we talk about, let's say the seller just is okay with losing all their down payment on the home. They just want to get out. Well, the market is down way more than what they've put in. So if they put in 10% down, if it's a home under $1 million, the market's down 25% since then. They're like negative 15%. So you're trying to buy one of these homes, the seller has a real struggle deciding, we're going to take this offer, which many of them are holding out. They're waiting for that buyer that's going to at least give them enough that's going to cover their mortgage and pay off all their mortgage debt. Well, this is why I call it a bailout. It's those sellers that are waiting for that buyer who's going to bail them out of their financial troubles. Any serious buyer, why would they pay extra? If it's a serious buyer and they're working with an agent who knows their stuff, the agent does research, they should figure out the market is here, but the seller wants there. Well, the seller's just not going to, that bailout isn't coming. So if we look at the other properties that have sold for, back at the peak time, they sold for over $1 million, you figure, well, they should kind of be around where the market is now because they bought for a minimum of 20% down. And, on paper, that kind of makes sense. But reality for many, many of these sellers, it didn't quite work out that way. They bought a home, say, $1.5 million back at peak times. And yeah, they would have needed a minimum of 20% down with the banks, down payment. Well, a lot of these people got second mortgages, they got private funding. So they gave the bank 20%. It would seem it's 20%, but the actual homeowner, the purchaser then, really only had maybe 5 or 10% of their own money. But the market was going so crazy. Every week, prices were higher and higher, and you just had to get in and you just had to take advantage of this money-making cycle that we're in. Actually, a lot of people bought not realizing it was a cycle. They bought thinking this is going to go on forever. So what difference does it make how many loans I get? The appreciation is going to, in half a year, I'll have so much extra money, I'll just pay off all the loans. Well, the market turned, but what would seem that they put 20% down, in reality, maybe 5 or 10% of that money was actually their money, and the rest was all borrowed privately, whatnot. Banks are not necessarily aware of that. So these sellers today that did it that way, wow, the market is down. Like I've been saying, 20-25% since peak. They're in trouble. And you offer a legitimate, decent price on a home to those sellers. They're wondering, like in their head, some of them have justified, okay, I'm going to lose all my down payment. But even that is a big thing. Imagine you put, in all 200,000, say, down on a home, 300,000, 400,000, and that's all gone. Some of these sellers have justified that, saying, okay, let's just clear this and move on, we'll rebuild. But if it's less than that you're offering a purchase price where the seller actually can't pay off all their debt, they can't pay off all their mortgage financing, bank, private, whatnot, they can't pay it off, how are they going to sell? They're going to sell their home and still be in debt. A lot of them just don't have the means to do that. So there are hundreds of homes that were purchased then. If they're on the market now, many of these sellers have a real tough decision to make. And some of them are on hopium, like we've used this before. They're on hopium, hoping that buyer's going to come and give them what they want or what they need to at least cover their mortgage. But the market is lower than that. And this is where I kind of say that they're looking for a bailout. It's not coming. There's not many buyers lining up to overpay these days, like, back in the wild west that we had a while ago. This is the situation with many properties. We see it with our buyer clients when we're looking to try to buy some of these. Sellers just are not willing to come down and go into debt after they sell their home. But at some point, they're going to hit a brick wall and really tough decisions need to be made. If you think this video can help somebody please pass it along. If you get value from what we're talking about, subscribe. And if you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Folks, we have a really nice detached house for sale in Kitchener, pie-shaped lot, finished basement. Check out the video. There'll be a link on the screen at the end of this video. Here we go. We're going to get started with a summary, a kind of a roundup based on monthly data. We've got every month here just for Peel region, detached properties only. We've got sales from December 2024 going back monthly to December 2020. We got sales, we got average prices. So let's look at sales. So for month ending December 2024, 260 detached properties were sold across Peel region. The previous year, 277. So we're down a little bit, but not that much. The previous year, 253. So we're up from there, but really it's basically the same. 253, 260, not any kind of material difference. Where we start to see a change, we've got to go back to December 2021, and that's just before peak pricing. 533 were sold last December, 260. Previous year, December 2020, we're at basically half of that now. 613 were sold in December of detached properties. We're now at 260, so about half. So that's the story with sales. Average sold price for month ending December 2024, so $1,241,000, compared to where the average price was last year or the year before, because now we're in 2025. So 2023 average price, well, we're down 5.8%, say 6% from where the price was the previous December. The December before that, we're only down 2.7%. Peak, well, almost peak pricing. So it's the December before we actually hit the peak, January and February, we are down 22.6% from then. And then if we go back, we're actually up from 2020 pricing 3.3%. So that's the history going back to 2020 versus now, or versus 2024. Looking at months of inventory, we're sitting, well, we finished the year off with 5 months of inventory. The same time a year before that, December 2023, we were at 3.1 months of inventory. Here's our regular program broken down by week. We're going to focus on Peel and Durham regions, specifically Mississauga, Brampton, and then Pickering, Ajax, and Whitby as our Durham sample for detached properties only for week ending January the 8th. We're going to start off with Mississauga. I should say, I've been saying it in all our shows this week. On Tuesday, we have a City of Toronto show, just the City of Toronto. Wednesday, we focus more on condos across the GTA, broken down condos for the City of Toronto, condos for York region, condos for Peel region. And that's Tuesday, Wednesday. Thursday is York region detached properties, and we focus on Vaughan, Richmond Hill, and Markham. And today, Friday, our show for the Peel and Durham region comes out, also focusing on detached properties only. And I'm saying all this because I've been saying the same thing in every show. This is for week ending January the 8th. It's the first full week past the holidays. We'll say, don't take these numbers so serious as being indicative of, this is where the market is right now. We're just kind of getting the year rolling. Things will, as we get into more of a routine of sellers on the market, buyers on the market, things will kind of sort itself out, and we'll see the true trajectory of where the market's going over the next few weeks. It's still a little early to tell. So for Mississauga detached properties, week ending January the 8th, 15 detached properties were sold. Average sold price is $1,373,000, which is 5% lower than where we were this time a year ago. The median price of $1,390,000 is 9% higher year over year. And let me just talk about year versus year. If we're looking at sales for Peel region only, if we compare all of 2024 to all of 2023, sales are up actually 3%. Active listings, we listed 66 detached properties. Or I shouldn't say we, but 66 detached properties were listed for week ending January the 8th. Months of inventory sitting at 5.9 months of inventory. That's for week ending January the 8th. That's Mississauga. Let's look at Brampton. 33 detached properties were sold. 2 of those were at $2 million or more. Average sold price shot way up to $1,218,000, which is 8% higher year over year. The median price of $1,140 is 6% higher from the same time a year ago. 33 were sold, 27% sold at list price or more. Listings shot up from 40, which is week ending January the 1st. So if you think about that, that included, kind of a bit about Christmas and then into the new year, the holiday season there. 40 were actually listed, detached properties. But now that we're starting the year, 113 were listing. We do expect listings to increase as we roll into January. Active listings are up a little bit, and months of inventory sitting at 3.7. Here is Durham region, and we're using Pickering, Ajax, and Whitby as our Durham sample. 16 detached properties were sold. Average sold price is $1,137,000, 1,137. It's 9% lower year over year. The median price of $1,165, a little bit higher, but rounds to a 0% change. 38% were sold at list price or more. 56 were listed, and months of inventory sitting at 3.6 months of inventory. Here's a quick summary. Pretty much, you're going to experience a balanced market across the board. Mississauga, Brampton, Durham region, pretty much a balanced market. But depending on the price point, it may be a little bit more competitive than some of the other areas you're looking at. Thanks for watching. Have an awesome day.